Real Estate Investment Trust. A REIT is a company that owns and operates a set of properties that generate income. So, commonly, di ba, pagka iniisip natin yung mga income-generating properties, that would be, say, your offices, apartments, warehouses. Pwede rin silang, say, invested in mga utilities like toll roads, hospitals, and the likes. Basta anything that generates income on a recurring basis, pwede namang gawing REITs. Tapos, these REITs are obligated by law to pay out the income as cash dividends. If you buy a REIT, I think 90% of distributable income has to be paid out as cash dividends. It's similar to actually owning a rental property. Parang ikaw na rin ang may-ari ng mga, let's say, offices or mga apartments. And it's good for people who want to earn more than what they earn in the bank. I think the indicative is around 4 to 6%. So, talagang mas mataas siya para ka talagang may pinauupahang property. And the beauty of it is, you don't have to have a lot of money to buy a REIT. Kasi typically, di ba, pag gusto nating bumili ng paupahan, we need several millions of pesos just to buy one. At least, pag binili mo yung REIT, diversified na siya, marami na siyang property sa portfolio, tapos pwede tayong mag-participate sa rental income na nag-generate niya. Binabayad sa atin bilang shareholders. Similar to stocks, yung pera ng mga investors, pinagsasama, no? So, ang REIT, mag-IPO siya. So, magre-raise siya ng capital from small investors. Ngayon, yung na-raise na capital, gagamitin niya para bumili ng more properties. Or pay down of debt. In general, for it to grow and generate more income, yung bibili niya dapat property din. So pagka ginawa ng company yun, lalaki yung makuhang dividendo ng mga shareholders. Also, when the prices of properties go up, the value of the REITs go up. Kasi itong mga REITs na to, ililist siya sa Philippine Stock Exchange. So kung gumaganda yung, say, rental income niya, di tataas din yung value. A REIT is actually professionally managed. So at the end of the day, when you get your cash dividends, it's net of all expenses, net of all taxes. So wala na yung headache na yon. So darating na lang yung dividend income mo sa stock brokerage account mo. And aside from that, it's very affordable. Initially, we talked about how you would really need a lot of money to, say, invest in an office or a condominium. Tapos, isa lang mabibili mo, yun pa, diversified. Kasi pag binili mo yung REIT, kahit isang REIT lang ang binili mo, usually, it has several properties already inside. And finally, liquid siya. Ibig sabihin, since it's listed in the Philippine Stock Exchange, let's say, kailangan mo ng pera, mabibenta mo siya agad. And not to mention, you can sell some of your REITs. You don't have to sell all. Unlike if you own a property and you want to sell, kailangan ibenta mo ng buo. So I think those are some of the benefits of owning properties through REITs rather than buying direct properties. These REIT companies, they will have an IPO also. Once they have an IPO, then you subscribe to the IPO to buy the shares of these REITs. Sabihin na lang natin, for example, nung time na nag-IPO, wala kang pera, okay lang rin kasi maglilist naman siya sa Philippine Stock Exchange. If you have a stock brokerage account, like through COL Financial, ang REIT, once nag-IPO yan, meron na siyang ticker. I-enter nyo lang yung ticker and then you can buy the shares of the REITs using your stock brokerage account. May risk din naman kasi let's say yung property na wala ng tenant, bababa yung dividend income. Tapos similar to normal stocks, valuations can fluctuate also. Pwedeng tumaas, bumaba, taas, baba yung prices ng REITs. And also, of course, yung mga macro factors, let's say, pumangat yung outlook ng office properties. So, syempre, yung rental rates niyan, bababa. When you analyze a REIT, kasi I think the temptation is there, titignan lang natin yung dividend yield. Kung mataas, sige, bilhin na natin. Pero I think what's important also is, first of all, knowing the outlook of the industry, maganda ba yung outlook niyan to the point na tataas pa rin yung mga rental rates? Kasi gusto rin natin may rental rate reversion na pataas ng pataas yung rent. Secondly, of course, the quality of the assets that are inside. Kung desirable ba yung mga location niya, gusto ba ng mga tao umupa doon. Because as much as possible, you want to buy a REIT na laging mataas ang occupancy level, di ba? Tsaka pataas yung rental rates para all the time, or most of the time at least, yung natatanggap ninyong dividends, pataas din siya, or at least stable. I think REITs would be an asset class that every investor should consider adding to their portfolio. The beauty of a REIT is, aside from potential capital appreciation, you also benefit from income generation. So I think for the more conservative investors who are not yet ready to go, aggressively into common stocks of listed companies that don't give out much cash dividends, this is in some ways a hybrid, or a safer option, because at least they will get the cash dividends on an annual basis. So maybe this is a product that an investor might consider, especially for the newbies, to start investing when they enter into the stock market. We will also be covering the REITs once they are listed. We will be coming out with research reports on them. Thank you for watching. To learn more about investing, follow, like, subscribe to our social media accounts. And if you want to read more about our research reports, they're also found in our website at colfinancial.com. Thank you again.
REIT, it is basically a stock. It's like an investment in the stock market. Except that it's a little bit of a hybrid stock investment. Parang hindi siya completely like a common stock. Hindi rin naman siya completely like a fixed income with a dividend. No? What I can suggest for investors is that to have a portfolio where it is part of your stock investment, but more stable ang dividend niya. Kasi nga, more stable ang return niya. So, if you're going to invest in REIT, I would suggest that you include that in your stock portfolio. If your stock portfolio is like 20%, maybe around 5% for that, might be a good way to start. Sa REITs, there are two types of returns that you are going to get from it. Number one is the dividend. The dividend is coming from the rental income that the REITs is generating, depending on the property that's in the REIT. So the rental income will be given to you as a form of dividend. And the other return that you will get from a REIT is really the appreciation of the price of the REIT that is listed in the stock exchange. So yung dalawang yon, pagsamahin mo, that will be the total return. Now, an attractive return for me, is a dividend yield of at least 5%. Kasi nga, it is an investment that you want to have a more or less stable return. So, a 5% at least on the dividend yield is good. And then plus return on the price appreciation of the REIT itself. So, maybe around 3 to 5% additional. So, you will have a total return of more or less about 8 to 10%. Sana as a projected or a target return for the REIT. Then that would be attractive for investors. So, if you're investing in a REIT, there are two major things that you want to consider. One is the value that you're going to generate from the REIT. For example, what dividend rate are you going to get, and the price of the REIT movement in terms of appreciation. So that's the value that you generate from the REIT. It really depends on the property and the lease rental that the property has. So kung okay yung occupancy rate niya, meaning lahat ng rent tenants are there and they're paying rent, and that should be okay. So it depends on the business or the property that it has. So, kung nagkaroon ng crisis or nagkaroon ng problem yung rent itself, no? Nabawasan ng tenants, nabawasan ng people who are renting in the property, bababa din yung income mo. So, that's the risk that you have. So, pag bumaba yung income ng REIT, bababa din yung value and price ng REIT. The second thing that you consider is how that value compares to other alternative investments. Like for example, a government security. If you compare that to a REIT, which is riskier than a government 10-year bond, siyempre dapat mas maganda ang return niya versus the government bond. The reason why I'm saying that it depends on interest rates, if for example, interest rates go up and then the government bonds give you a higher return, or let's say 5%. So it is better for you to invest in a government bond because it's risk-free versus a REIT that has risk in it, no? It is not guaranteed by the government. So kung 5% lang ang return mo sa REITs and then 5% yung government bond, mas mabuti pa doon ka na sa government bond. So it depends. If interest rates go up, then it might be more attractive for investors to look at other investments. But if interest rates go down, for example, right now about around 4% or 4.5%, and then your REIT will gives you more about 5 to 8%, then it becomes a little bit more interesting to invest in a REIT given the risk that it takes versus a risk-free government bond. When you're investing in a REIT, it's your way to diversify your portfolio because it's a hybrid of a fixed income and an equity. It's not entirely a fixed income, it's not entirely an equity, but it's a hybrid of the two, giving you a stable return in terms of dividend, as well as the possible upside on the price of the REIT.